This is David Patrick Fitzstock Charts market video update for May 29, 2019. We are in a 14-day NASDAQ downtrend. This is the worst downtrend or best downtrend of the year if you're trading the downtrends. And we've talked over and over and over again, you don't have to trade the short side. What you have to do is preserve your capital. Preserve your huge year-to-date gains when we go into these no trends and downtrends, because that's when average traders lose their money. Don't be average. I say it over and over and over and over and over again. Listen to the tape. It's very important. We've already had 3 huge uptrends this year. One of them was over 40 days. That is when you crush the tape and print money consistently. Right now is not. You need patience. You need discipline. 100% cash I am still in. That's my retirement account, my investment account, my swing long accounts, and my trading account. Continue to take 5-minute rules of engagement with ES in the trading account, but the bigger accounts remain all cash. Why? Because I trade the charts. That's my risk profile, my trading time horizon. Sometimes I get back in at higher prices than I get out. Sometimes I get back in significantly lower prices. But I manage my risk. And I know when it's time to be long and when it's time not to be. On 10-10-18, I went cash. On 5-10-19, I went cash. We're going to look at that in a moment. Our 90% club, 296 triplers since we launched the service, 31 year to date, 110 different options have doubled since just this year. 1,053 have doubled since we launched the service back in 2013. Okay, what is that? That's not what I wanted up, so let's see if I can really fast get what I wanted up here. Let's see here. So I had the SPX up weekly, and that's what I'm trying to get up. I don't know why it wasn't up here, but I'll blow it back up for us so you can see what is going on. I had a consultation later yesterday with someone, a subscriber, and there's always a relevant point I like to bring up from these trader consultations. You know, someone was saying yesterday, are all uptrends created equal? And that's a great question. I've said before, in technical analysis I've done for 20 plus years, trading for 20 plus years, and all uptrends are not created equal. And just to give you a case in point, if we went on an uptrend today, there's still a good chance I could be all cash. I might put some options on to try to trade the uptrend. But as you can see back here, November 2016, when I went all in, I went all cash right here on 10-10-18, went all in right there, long, and then went all cash. I'm looking at the higher time frame. Our higher time frame is the weekly. So when we have all the stars aligned, we have a daily uptrend, we have weekly confirmation, and we have a historical chart pattern comparison. To me, those are all three big stars that are aligned. Yeah, that's when I'm swinging for the fence. Everyone's swinging for the fence is different. Some people are 150% long, some people are 100% long, some people are 50% long. Everyone's different. I'm leveraged long during these time periods. And back in November, we don't have the daily up. This is the weekly. We went on an uptrend right there this week. Well, we also went on an uptrend in the weekly, and we saw a MACD weekly bull cross. That's all stars aligned. We had historical chart pattern comparison also. Why did I go cash here? Well, we had broken. There was a bearish historical chart pattern comparison we were looking at, and we broke an uptrend line, and we saw the weekly MACD bear cross. Yeah. Why did I go all cash, or why did I go all in the market here? Well, the daily went into an uptrend, and the weekly saw MACD bull cross. And we went into, a 16-plus week uptrend. Why did I go all cash here? Simply, we broke another uptrend line. We saw a bearish historical chart pattern comparison, and MACD was starting to curl down, and now we're starting to see it cross. These are simple trading rules of engagement that we use that help us, keep us on the right side of the market, whether it ends up being cash or in long market exposure. So right now, I'm in cash, but if we went into an uptrend today, that doesn't mean I would be aggressively long because our weekly is still bearish. Look at the weekly MACD. It's still MACD bear crossing. We're still in a downtrend on the weekly. So to me, there's no urgency to do anything with my bigger accounts, which is the retirement, investment, and swing long accounts. Once again, you do not need to short stocks. If that meets your risk profile and that's what you want to do, by all means. We have a lot of stocks that are in the 90% club from put positions from our ESFL. But to me, if you're struggling trading, that's the last thing you want to do. Because what happens is you get stuck short and the market goes up, and then you have a losing position on and you miss the whole uptrend. And unless you're professional or really know what you're doing, you don't have to do that. But you do have to preserve the capital in your year-to-date gains. Okay, I think that was all I wanted to talk about. 204 stocks have engaged in the year. 2 stocks, no scale, 19 losers, 183 winners, 89% win rates. Unheard of in the industry. Probably unsustainable. More like 75% win rate is probably what we've been on course for since we started the service back in 2013. We're overachieving huge this year. And we had monster numbers last year, by the way, too. But where we are, let's delete some of these drawings here. And we have the daily. So we're in a downtrend on the daily. We're holding this 200 SMA support. MACD is weak. And the MACD is suggesting lower prices, even though we're at support. So you could bounce around here for a day or two or maybe even break it. I'm just saying this is support until it isn't. But the MACD is saying this thing might not hold, and that we might come fill some of these gaps down here. So, someone was saying on Twitter yesterday, I think it was yesterday, something about, why do you say we're in a trading range and this and that? And my response was, don't fall in love with, the trading range thesis. The big thing we need to fall in love with is rules of engagement with trend, and understand when we're in no trend and we are in a downtrend, that's when you preserve your capital. We're not going to pick the tops. We're not going to pick the bottom. So is this a trading range right here above the rising 200 SMA? To me, it is, but it is until it isn't. Trading ranges always eventually get broken, right? Either the upside or the downside. So right now it's in a trading range until it isn't. But don't be obsessed with that. Don't think, oh, wow, I'm going to buy the bottom of the range. If you want to buy the 200 SMA support, that's fine. I just use 5-minute rules of engagement if you're going to do that, right? So if you're going to buy the 200 SMA support in the daily, real simple. We had a nice long setup right here, right? Break of let me see if you can see it on the charts. And I posted this on Twitter. Break of this downtrend line, MACD bull cross. I said above here, I said scale, 3/4. If most likely you get stopped out of your entry unless you're still keeping in at Globex lows. You got to remember, this is a counter trend trade long. So if you are going to trade those moving averages, like we just pointed out, the 200 SMA on the daily, use the 5-minute chart so you're not picking a bottom, because you can carve right through moving averages very easily. Now, the 200 is usually pretty firm, but when we flip back to the daily here, it wasn't that firm a resistance here. Right? It wasn't that firm of support here. We broke it for 2 days. So it hasn't been a great area, at least over the last year. So is it a holding today? Are we seeing a significant bounce off the lows? Yeah, 10, 15 handles off the lows. Yeah, that's great. But I think the bigger picture is we're in a downtrend. The bigger picture is this trading range can get broken. And the bigger picture is the weekly's bearish and the daily MACD is suggesting lower prices. So okay, let's get into the rest of the market. The NASDAQ holding the 200 SMA, it looks pretty much the same on a lot of these. Oil futures are not holding the 200 SMA. They're breaking below and they're confirming lower. And oil does not look good. We've talked about this really for the last few days. Oil does not look good. It looks bearish. The financials have been in this wedging pattern for, 3 months. They got to the top of the wedge, the bottom of the wedge. They're right in the middle of the wedge. Maybe they're heading back to the bottom of the wedge. They're just, to me, that's not when you trade the financials. You trade them when they're leading and when there's momentum, and there's just really, when we're in a wedge pattern, it's our least favorite pattern to trade. Speaking of trading range, IWM's been in a trading range for what, 3, 4, almost 4 months. There's really not too much to do there. And the hardest trade, like I say over and over again, is staying cash or staying patient and staying disciplined using stops. Those are the hardest thing. It's easy. Anybody can get a winning trade on and scale it and hold it. But stopping yourself out, being disciplined, being patient, staying in cash when you can, and preserving year-to-date gains and capital during that downtrends and no trends is sometimes hard to do because emotions and opinions become evolved, and sometimes you think you're smarter than the market. And arrogance, you have to stay even-keeled because it's easy to get arrogant when you have a high-odds system like we use to trade. IYT transports, you still have a head, left shoulder, right shoulder. It's coming down here. That's the right shoulder. It's sort of breaking it. You know, it looks like it wants to touch 170 or come fill this gap. I'm not going to pick a bottom with this. This is really in a 15-day downtrend or more, and it just doesn't look great. So it continues to look bearish. IBB, that continues to look bearish. Gold, is it telling us anything? No. We've been bullish bonds since down here. Then we saw the Golden Cross. Then we saw, I think, TLT's in the 90% club at least 2 times over last year. And it's at a 52-week high. All I can say is our analysis worked very, very good. Our ESFL worked very, very good. And if you're long TLT or bonds of any sort, you're getting paid, and you're getting paid fat. So congrats. Let's go to Apple. So we had this Golden Cross here. Apple's in the 90% club 4 times this year. What happens? Well, it's giving it back. And then maybe you got to start using the Fibonacci retracements. Where was the lows to the recent highs? It's right at that 50%. It's starting to break it. Maybe it comes down to the 61.8, around 170 bucks. This low right here is going to be very critical. That low on a chart is 169.5. So 169, 170 is going to be huge critical support for Apple. And we're not going to pick the bottom there. We're just going to see if it gets down there, see if it holds. Amazon holding above the 200 SMA. The market is weighting Amazon down. Otherwise, I think that one might be leading and ripping. Netflix holding in that wedge pattern. Not much to say there. Booking continues lower. I think that stock wants a 52-week low. Just like Tesla continues at a 52-week low almost every day. Facebook, we're getting some slow charts here. Let's flip over to Google or see if the whole thing is down here. It looks like Google's up. Google, yeah, that looks bearish. That looks like price weakness confirmation with MACD and price. So Google does not look good. Let's see if our Facebook will finally come up. Holding the 50 SMA. Doesn't look like a great trade. I would avoid it. Nvidia continues to look bearish. That one looks like it wants a 52-week low. By the way, the semiconductors look horrible. They are now off 20%. They're in bear market territory off their highs. You have to be very, very, very careful when the semis are breaking. Transports don't look good. IWM's in a trading range to getting to the lower end. And IBB doesn't look good. And oil looks horrible. You know, and this is another reason why, like I said, cash is a position. Intel, AMD, Micron, they all don't look good. OLED, Avgo, they all look bearish. Light, Xilinx, which we hit a home run with this year, huge, holding the 200 SMA. Okay, so Microsoft, Oracle starting to break down. Adobe is holding support. Some of these huge leaders this year, Coop, Now, they're just hanging in there. I don't see a lot of downside on them yet. Will the market take them lower? Who knows? Workday's having a really bad day. Jobs grinding lower. Splunk holding the 200 SMA, FF5V, 52-week low. Team broke out the new highs the other day, then sees the gap down, and now MACD bear cross. The market is just starting to crush even some of the leaders. Another reason why you need to conserve capital. Roku, I think, gaps down. It goes down 10% off its highs yesterday. You know what? MACD is still confirming higher prices, and this one held the 10 SMA. So this is one that's defying gravity. Don't pick a top with this one. Continue to ride it higher. Roku continues to look pretty good. Twitter, grinding nowhere. It's holding the 50 SMA. Expedia, did we look at that one yet? Not much to say there. Let's look at some China stocks. Baba looks lower. Baidu looks lower. YY lower. Sina lower. WB lower. They all don't look good. CY BR, some software stocks just hanging out. Vive, BMW. I don't see a whole lot of leaders to the downside. BMW, if it breaks that 50 SMA, it's got a long way down also. Do we look at NTES, Box? Don't see a lot of leaders, at least to the upside. GoDaddy, a lot of stocks are hanging in there. And not, there's some 52-week lows, semis look horrible. But for the most part, a lot of these old leaders like Coop Now, CRM, Workday, CYBR, VMW, Vive, they're really hanging in there. And if the market's really going to break down, it's going to have to break those stocks. Otherwise, those stocks are going to lead again on the way up. So we have to keep an open mind to where we are right now. And really, we're in that trading range and we're holding the 200 SMA until we're not. So JP Morgan doing nothing, Citigroup grinding, Bank of America. The banks are boring, and I don't see a trade there. If it's a trade, it's probably the south side. Banks have been tough to trade all year. I just would leave it alone. What about CME? Continues to grind higher. CBOE, ICE. ICE looks like it wants a 52-week high, so those stocks are heating up. They look great. What about cannabis? Tilray, Kronos, nothing. CGC, that's starting to melt back down. So as good as they looked a few days ago, they're now looking that much worse right now. We're going to look at oil, and there's just not a lot of momentum. Exxon actually looks really bad, and it hasn't really broke down yet. Diamond Offshore, 52-week low. Rig getting close to a 52-week low. Marathon, ugly. Oxy, ugly. That's at a 52-week low. The sector, oil looks very, very bad. I've talked about that for a while. Amgen, this is a sector that continues to look weak. I don't see a lot of stocks that are Alexion looks like it wants to break. I don't see a ton that look like they're acceleration mode to the downside. Aluminum holding, RGN, not doing anything. Let's look at Chipotle. Looked like it wanted to break down. Now it's just holding. Its stock is extremely strong. Twilio, it's holding. IQ, Docu. Yeah. Really not a ton. So let's get to Lyft and Uber and SPX. So we talked about this Lyft engaged here. I think it paid a little bit, came back in. MACD looks good. Price is not cooperating. I think if we can get back above here, you can look to add. Otherwise, there's nothing to stop this one to come right back down and either do a double bottom or a higher low and then create some pattern afterwards. So I don't see a trading edge right here on that one. I would leave it alone. Uber, what did we talk about? It's either going to break to the upside or the downside out of this wedge pattern. It's breaking to the downside. Now, this could be, MACD's not at a new low, so watch for this to be a trick and this thing to come right back up. Don't see a trading edge here. I think we're going to need above this candle, which is 41.80, to get long Uber. Okay, closing notes. It's May 29, 2019, and the bottom line is we're in a downtrend. We're in a 14-day downtrend in the NASDAQ. This is the SPX. It is holding up in this trading range above the 200 SMA. Once again, the weekly is bearish. The weekly is very cautious. The MACD is suggesting lower prices. We're at support. We're going to bounce around. The market's very sloppy. I'm doing very little, and I'm being very disciplined, and I'm being very, very, very patient. I suggest the same. That's all I got for you, the market video update. Have a great day.